Stuart Pearce was the manager at the time.
Oh, of course.
I was on $5 grand a week.
There we go.
He did try to do me one of these times. So I was on
$5 grand a week.
I was worth it.
17.
He offered me double money, so 10 grand a week.
What?
But I just got into the England. I was just getting England.
You bursted.
Exactly. So I ended up on 50 grand a week. And he tried to do me out of 40 grand a week.
Game's gone.
The story goes on. You had to have so much English players for the quota. So Man City offered me 100 grand a week, 5.5-year deal, and I said no. I said no.
You did what?
Yeah, exactly. Because I was number 2 behind Zabaleta. So I'm not all about the money.
Have you recovered from that decision yet?
Why do you think I work for every I need to chop it off.
Idiots!
I went to Aston Villa. That was less money. But then we got relegated in the first season, so my wage is half. So I've gone from 100 grand a week offer to like 25 grand a week in the Championship.
It's still a living.
Well, not a living for big meeks, you know.
No wonder you can't stand Pablo Zabaleta.
Honest to God. Stuart Pearce was.
What do you bring to the table?
Everything. I got 2 kids, you know what I mean? So everything. If you're willing to provide for my kids, then everything.
Everything like what?
My kids, my life, my mental health, everything, like everything. Everything you want to know about me, I'll bring to the table for sure.
Man ting, yeah? Rav, this thing's built like a jacket potato, and she's got all these demands and that. It's a big cost of living crisis right now, Rav. Nobody's got time to be taking care of next man's youths and that. What is this? Is man the NSPCC, Rav? The only thing this gal's bringing to the table is a belly, Rav. It's not looking good, Rav. It's not looking good.
What do you bring to the table?
Aww.
What?
Stuart Pearce was the man.
What do you?
Aww. My ex used to have that one. Good memories.
I know you did not just say that. You don't even remember what you had for breakfast, let alone you're telling me that you remember what your ex
I mean, it was very memorable, babe. I'm sorry, I'm joking. Aww.
If you're a UK resident that owned or lived,
What is a good amount of money to spend on the first date?
I would say, especially like costly lives, you know,
Costly lives.
costly live, maybe like 150.
So that's when you put the calculation, what's half of 150? That's like £75 each. Not gonna lie, I would say £300. £300 on the first date for me. That's 150 each.
But you're not expected to pay, so he should just fuck up 300.
Yes.
public. How do I? Ooh, I need some water. Hello traders, welcome to today's live stream of the US session. The US market is just about 45 minutes from opening, and as I said yesterday, I wouldn't be able to stream today, today's session in the morning, and I couldn't. But yeah, just to kind of recap, nothing has really changed from yesterday in terms of the trades I was in. I had a couple trades that I was in that I showed you guys. In fact, I've been in both of those trades since Monday evening. It's been a strange one this week in the markets in terms of not really getting any kind of volatility in the market. And I'm trading the yen pairs, and if you know about trading, you know the yen pairs tend to have a lot of volatility, but didn't get that this week. So but let's look at what the dollar yen has been doing since yesterday. Yesterday when we streamed, I told you yesterday this is a corrective pattern that the market is making, and you don't really know how long these corrective patterns is going to last. Sometimes it can last a few minutes, sometimes it can last almost the whole day, and this is what we're seeing right now. The market kind of corrected in this channel for almost the whole day, and then finally it looks like we're making a way down. But like I said, I will be closing my trades today. I will not be heading into the week Friday with my trades open, because I hardly trade on Fridays, and at this moment in time, it's both of the position look like it's gonna be, I've got profit of 240 on this one and a loss of 280 on this one, so minus 40. But in terms of pips, this is minus 88 pips. and the dollar yen is on 82 pips, so it's not really much. There isn't really, it's more like break even, to be honest. If you look at both of the trades, which is still going to put us on a positive week, because the only other trade that I took this week was on the pound against the New Zealand dollar, and obviously that gave me a profit of 32 pips. So unless we have a crazy sell-off in this market right now, which it looks like we are going to get it, but yeah, I mean the US market is not open yet, so let's see how long this is going to last, if we're going to have enough momentum to keep going down. Even the pound yen is looking like it's going down. I mean, this is one trade that I wasn't really, I mean, I'll be happy to take a break even on this trade, although it's looking like it's could potentially be a losing trade. But it's a trade where it just wasn't clear enough for me to, I mean, in terms of taking the trade on the strategy that I use, is a perfect trade setup in terms of my extended runner strategy, and this kind of just changed everything. The whole structure of the market here just wasn't clear enough, and I could potentially I could get away with it and end up being taking a break-even trade, or I can take a loss on it. It's really kind of 50-50 on this one. And the pound and the dollar yen, definitely that one's going to be a winning trade. So and if it does go, like I said, I do have still about around 80 pips from from the place I would want to exit the trade. So let's see how this is gonna develop, and How are you? Please explain Quasimodo. Quasimodo pattern, what's that? I don't know what Quasimodo pattern is. I don't trade that strategy. G Ali, I don't trade that strategy, so I'm not familiar with. Okay, I've just had a look at your a brief. I just googled what the Quasimodo pattern is, and I can tell you that that pattern is actually very, very similar to one of the patterns I trade in the in my contraction and expansion strategy. So I will be able to explain it to you. I didn't even know it was called Quasimodo pattern. So that's how, you know, trading is sometimes, some of these strategies, they just have different names that, you know. But yeah, so Quasimodo pattern is one of the, I'm going to explain that to you, and I'm going to explain Gartley pattern to you as well. So Quasimodo pattern is, well, you call it Quasimodo pattern, and I call it 1, 2, 3 as part of a trend. Yeah, so bear with me, I'm going to explain it to you, but I can guarantee you that it's exactly the same thing, Ali. So 1, 2, 3 as part of a trend. That's what I'm going to explain 1, 2, 3 as part of a trend for you, but it's the same as a Quasimodo pattern, because I just had a I just googled what a Quasimodo pattern is, and this is basically what the pattern look like. Something like that. They said it's a series of highs and lows, and then it's, you know, it kind of explains what a trend is, but don't worry, that is just going to confuse it even more. Let me just explain to you what a Quasimodo pattern is the way I know it, based on my contraction and expansion strategy. So let's delete that, let's get rid of that. I like it when people, you guys ask me questions. It's really good. And so 1, 2, 3 is part of a trend. So first of all, it's all about identifying what a trend is in the market. So as we know, there's 3 different types of structures that the market has. We have bullish market, bearish market, and consolidation. Those are the 3 different structures. So when we're talking about a bullish market, I'm going to explain to you. So a bullish market usually starts with a bullish structure. First of all, what is a bullish structure? This is a bullish structure. I'm going to draw a bullish structure and I'll explain to you what exactly is a bullish structure. Now stay with me, because this is going to lead on to the explanation I'm going to give you. So this is a bullish structure. A bullish structure is a structure that consists of, you know, we have a starting point here. Quasimodo, I've never, that's really strange. So we have a starting point here. We have an initial structure high here. And we have an outside return, pullback, or retracement, however you want to call it. And we have a new structure high. Now, I just drew this for you as a bullish structure, but you have to know the rules of why this is a bullish structure, because if you go onto the chart and you try to find something that looks like this, you might just find maybe 1 or 2. Because this is very symmetrical, this is very perfect, this is perfection in terms of, you know, the length from this to this equals the length from that to that. The pullback is almost halfway, like it just looks pretty. But when it comes to trading, trading doesn't do pretty. Trading is the master of, I'll call it imperfection, because the most important thing is the rules. If you have the rules at the back of your mind, and this is what I'm going to explain to you. So in terms of looking at a bullish structure, this is what a bullish structure looks like. However, there is 3 different rules that this structure needs to abide by before you can call it a bullish structure. And the first 2 rules are to do with the outside return. So I'm going to put this a little bit here. Let's leave that here for now. So the outside return, the rule of the outside return, the first rule of the outside return is the market must not extend beyond the starting point. So if this comes here and breaks the starting point, you don't have a bullish structure. That's just the first rule. Now the second rule is this outside return needs to retrace to at least the 382 Fibonacci retracement. So you have to draw your Fibonacci retracement. Hopefully you know how to use a Fibonacci tool. But if you draw your Fibonacci retracement, swing low to swing high, you go from the starting point to the initial structure high, and you look at the retracement level. So this outside return must touch at least the 382 retracement. If this comes and stops here, and then it goes there and goes over there, you do not have a bullish structure. So the retracement has to come down here, and it cannot go beyond here. So basically what we're saying is the outside return of a bullish structure needs to be between the 382 Fibonacci retracement and above the starting point. So this zone, this is where the outside return needs to be. This is gonna explain the pattern that you asked me to explain. So just stay with me for now, even though it might not make sense, but just stay with me for now. So now we got the two rules of the outside return. I remember I told you the bullish structure has 3 different rules. So the first 2 rules, we covered it. So this outside return, so if you're looking at a bullish structure on the chart, if you see a retracement that goes all the way deep here, and then the market rallies, you're not going to look and say, oh, this doesn't look like a bullish structure. No, it is a bullish structure, because it doesn't look symmetrical, it doesn't look perfect, but the market only cares about the rules. That's the most important thing to the market, is the rules. And this is following the rules. So next thing we need to look at is the rule of the new structure high. So this new structure high, for this new structure high of a bullish structure to be valid, any part of the candle must go beyond the initial structure high. So we're not here, even if it's the wick of a candle, even if it's the body of a candle, it doesn't matter. Any part of the candle that goes above the initial structure high, you have a bullish structure. Those are all the rules that the market needs to meet. So if this comes here, it's still a bullish structure. If it comes here, you can see something like this in the Forex market, in the chart. You can look at the chart and you see something like this. And this is a bullish structure, because this rule has been met. The rule of the outside return has been met, because this is clearly above the initial structure high. This is clearly above the starting point. This has clearly retraced to the trade situation, and then you have a bullish structure. Now that you know what a bullish structure is, the next thing you need to understand is what a bullish market is. So a bullish market is made up of one or more bullish structures joined together. So if this market continues to move, so the next move that this market is gonna make another outside return. So now this outside return needs to stick to the rule of the bullish structure. So again, but at this point in time, you're gonna move your starting point. So this is gonna be the next reference to you. You're not gonna look at the original starting point and say, oh, this has to come beyond. No, you look at the previous outside return, which is gonna become your starting point. Just like normally in trading, when you see a previous resistance, when the resistance is broken, it becomes a support level. That's how it works. It's the same analogy. So the market breaks here, forms your new structure high. The next retracement is gonna be a new outside return. And this outside return needs to stick to the rule of the bullish structure. And once you get something like this, and then the next move here to form another new structure high, then you have a bullish market. This is a bullish market. So I hope that's clear, an explanation. So now we go to the point that you're making regarding the Quasimodo pattern, which is something, like I said, that's the first time I'm hearing it today in this live stream. The Quasimodo pattern. I call it 1, 2, 3 as part of a trend, because, so let me just explain what I mean. Now, the next move you would expect this market to make, you would expect the market to make another outside return, right? And stick to the rule of the bullish structure. But if this next outside return comes back down and breaks the previous structure here, this is going to be your move it there to your starting point. And remember, you have a rule where the market cannot break the starting point. So if this comes and breaks the starting point, to the market, That is the first sign of communication. Like, there's something I tell a lot of my students, you know, learning the language of the forex market. It's about communication. Every single move the market makes, the market doesn't make random moves. If it breaks the structure, the market is trying to tell you something when it breaks the structure. So once we come down here and break below the previous structure, the previous starting point, what's going to happen is this market would rally, because 9 times out of 10 when the market breaks the structure, it retraces. Now, according to your Google, your Quasimodo pattern tells you that this market will retrace back to the previous structure, the new structure high, and then this is the position where you will be selling the market. That's what your Quasimodo pattern says. But I'm gonna go one further and tell you that you have to be a little bit careful, because selling here, that's why I said this is my strategy. This is a 1, 2, 3 as part of a trend. This is only one of the possibilities where the market could reverse. This is just one possibility. There's another possibility here that the market will go all the way to the previous structure high before you get a move down. That's a second probability. There's another possibility that the market will just retrace a little bit to a certain Fibonacci level, and there's so if you were to follow the analogy of the Quasimodo pattern, then you would probably be taking most of your trades at this previous structure, which is still going to be fine. But knowing the fact that this is, I mean, I call it 1, 2, 3 as part of a trend. The market has the, you know, and I'm going to give you an example of a trade like this. Just bear with me, and let me go over to my trading view. I'm going to show you. I've predicted. I've made analysis on the Quasimodo pattern using I mean, I call it, like I said, I call it 1, 2, 3 as part of a trend, and I'm going to give you an example of the predictions I made, and you're going to see how it works based on how I just explained to you. So for those of you that are joining me, I'm gonna go onto the trade in a second, but I just need to explain. Someone posed a question on the live chat, so I just explaining what he needs to know in terms of what the Quasimodo pattern is and how we can understand it. Hopefully my explanation is good enough for you. But let me just show you the Quasimodo pattern. Let's go to Bitcoin. This is one of the predictions I made on Bitcoin using the 1, 2, 3. I don't like calling the Quasimodo pattern because that's just, you know, this my prediction. I call it the 1, 2, 3 as part of a trend. So we look at Bitcoin here. This is a prediction I made probably on, when was it? February 27, 2020. Using the pattern I just explained to you, 1 to 3 as part of a trend. You see, if you look at this market, so this is like the complete opposite way. This is in terms of looking at the market in a bearish way. So the market has been bearish here. If you look at if you understand what I just told you in terms of structure, the market making bearish move. You have you know, so see that as your starting point. You have that your initial structure low in this point. You got your outside return, new structure low, and look at this move that comes and break the previous outside return. That is the first sign of communication. I look at where I posted my buying signal. I say if Bitcoin comes all the way back, this is way back then to when Bitcoin was around 55k. If Bitcoin comes back to around 5k, this is where you should buy. If you're trading a Quasimodo pattern, you would be buying somewhere a little bit above there. So that immediately doesn't give you a good risk to reward ratio. I look at what happened after that prediction. Bitcoin went all the way to 50k. Did it go to 50k or 48? Yeah, it went to 65k. Went all the way to 65k. So Quasimodo pattern, I mean, that's the first time I'm hearing it, but if you ask me, I'll tell you this. I'll go a little bit deeper and explain to you that this is all, like, you know, if you're gonna base your trading based on that pattern, then there's a lot that the pattern doesn't really cover. So I hope my explanation was good enough for you, Ali. That was a great question, by the way. But anyway, let's get back to the trades. So for those of you guys just joining, I'm still in the trade that I took yesterday or Monday evening. Sorry, I took a short position Monday evening, and yeah, so this trade is still in progress. I haven't closed it, but I will be closing this trade in the today, really, in the next couple hours, because like I said, I rarely trade on Fridays, and I'm not gonna let my trade run into Friday. But we're close to the target. Thankfully, we're still about 50-60 pips close to the target. And the other trade that I'm in it is the pound yen, which is probably approaching. It's not really close to break even. This one I'm not so confident. I mean, I'll be happy by taking a break even trade on this one. That's absolutely fine. So it's still going to be a profitable week because we had a 32 pips winner on the pound New Zealand dollar. So this is still going to be a profitable week, but we'll just see how profitable it is going to be. Depends on how, in terms of the volatility we've got headed into the US opening, which is only 18 minutes away. You're welcome, G Ali. That was a really great question. Like I said, guys, if you do have any questions, any strategy you want me to explain, if I'm familiar with the strategy, I will explain it to you. And yeah, just drop in the group chat, man. Let's make this really interesting, because if there's no questions, sometimes when I don't have anything to talk, I just stay quiet, and that's not good for the live chat, because we're here to talk about trading. I love trading, and but these strategies that I do trade myself, the day trading that I do with these strategies, they're not nothing you're gonna see out there. Trust me, like I'm telling you, you're not gonna see that out there. But yeah. Oh, Gartley pattern, yes. I'll explain Gartley pattern. Can you just give me quickly just a second? I need to go and get a refill of water. I need some water. I'll be back with you guys in 1 minute. Okay, Gartley pattern. Let's talk about Gartley pattern, shall we? Okay, let me just have a look at this trade and see what's happening. The market is still... I'm going to explain the Gartley pattern in a minute. Just give me a minute, Ali. I need to check on my trades. Okay, so yeah, like I said, don't bother with trying to learn. People just give it a fancy name, Quasimodo pattern, like that. Sounds really fancy, and that's one thing that new traders need to be careful. Every time they come into trading and they hear some fancy name, they just get all obsessed with trying to learn something. That's, yeah, they give it a really fancy name. So I'm gonna just delete all of this before I start talking about Gartley pattern. Gartley pattern is an advanced pattern. When it comes to advanced pattern, that is my forte. I mean, that's something that I've traded, and I still trade advanced pattern to this day. It's one of my favorite strategies to trade. So first of all, let's just briefly talk about what an advanced pattern is. An advanced pattern, like I said, the easiest way to look at an advanced pattern if you are someone who doesn't know anything about advanced pattern, the first thing I'm going to tell you is that an advanced pattern it consists of two triangles that are joined together. Now that is just the start. So if I draw a first triangle like that and a second triangle like that, and I put them together, you have an advanced pattern. But like I said, it goes much deeper than that, because for an advanced pattern, there's a lot of rules in terms of, depending on which advanced pattern you're dealing with. There's a lot of rules, and the rules all have to do with the Fibonacci ratio. So that's why if you wanna be able to understand Gartley pattern or advanced pattern, then you need to be able to be familiar with using the Fibonacci retracement tool. So let's talk about what a Gartley pattern is. As always, a Gartley pattern, like every advanced pattern, they all start with an impulse leg. Yeah, but instead of labeling this as a starting point, all advanced patterns have a labeling that starts with an X. So we're going to label that as the X leg. And then the end of that impulse leg starts with A. So from here it gets easier, because after X you go alphabetically, A, B, C, D. After X it goes alphabetically. So you got the impulse leg of a Gartley pattern. What comes after the impulse leg, what comes after every impulse leg, is a retracement, an outside return, a pullback, however you want to call it. You're not wrong. So you get a retracement. But just like when we talked about the bullish structure, we talked about the rules of the retracement, the rules of the outside return. This has a rule as well. So for a Gartley pattern, let me just label the end of that B as well. For a Gartley pattern, the A to B leg of a Gartley pattern must retrace and touch the 618 Fibonacci retracement leg only. So if you have, yeah, you're right, Ali, you're right, 618. If you have a market that retraces and touches the 786, you don't have a Gartley. You probably have a butterfly pattern. If you have one that retraces and touches the 50%, you don't have a Gartley. You probably have a bad pattern. If you have a retracement that touches the 382%, then you don't have a Gartley pattern. You probably have a cipher pattern. So for Gartley pattern, retracement onto the 618 retracement only. So once you get that retracement, the next move that comes, like I said, we go A to B, B to C. Now this is where it gets a little bit tricky, a little bit, but stay with me, because when we're talking about this leg, so I just explained to you the Quasimodo pattern, or whatever you call it. I call it the 1 to 3 years part of a trend for myself. I just explained to you the whole structure, the bullish structure. Yep, you're right. Only I just explained the bullish structure to you. And if you remember when I was explaining what the bullish structure is, we talked about these move having to go beyond A for you to say you have a bullish structure. But when it comes to advanced pattern, when it comes to Gartley pattern itself, this going above A will completely invalidate the pattern. That will just make it a bullish structure. So if you don't have a Gartley, you're gonna have a bullish structure. If you don't have a bullish structure, you're probably gonna have a Gartley. So now, but it gets even more interesting here, because you have, so I'm just gonna put a red line there, because the market cannot go beyond that line if we're dealing with a Gartley pattern. And we've got the B to C leg. So now we're talking about the Fibonacci retracement of this line. So if this market retraces, for those of you that are joining, I'm gonna go back to the trades I've got open. I'm just trying to explain a question that someone asked on the live chat, which I want you guys to ask, because we're here to do trading. The trades are going really well, guys. We're well into profit on the dollar yen, and pound yen is approaching break even, and I will be closing my positions today. So but yeah, so we're talking about the C leg. So G, any guesses what you think the Fibonacci retracement for the C leg of a Gartley pattern is? I'm gonna wait a second while you think about that, because I think you know what this. I think you know how to trade this pattern. You just wanna. Any guesses? Can you guess what the retracement for the BTC leg of a Gartley pattern should be? One thing I can tell you is definitely cannot go beyond the A. It definitely cannot go to the 886 retracement. No, you're right. It cannot go to the 886 retracement. It cannot go to the 786 retracement. It can go to the 618. It can go to the 50%, and it can go to the 386, 382 retracement. So you have a whole 3 different Fibonacci retracement level that is free to touch. If it touches the 382 retracement, that's valid. If it touches the 50% and the 618, that is still valid. And from this point onwards, it's all about just waiting for the market to get to your entry point, which is going to be somewhere there, and that's going to be a C to D leg. And we're talking about entry point of the D leg of a Gartley pattern. Like, there's 2 ways that you can do it, and both ways are not wrong. You're right. Yes, 127 extension, that's good, but 127 extension of the A to B leg, yes, that's going to be your entry point. You can do it that way, and that's the way I do it. I mean, other people do it in a different way. They look at the retracement of the X to A leg. That's also not too wrong, because in terms of where the position is going to be, it's not going to be way too far off. So if in terms of Gartley pattern, this is all the Fibonacci rules that you need to know for the Gartley pattern. And but obviously knowing the Fibonacci rules for Gartley pattern doesn't mean you can trade a Gartley pattern, because now you have to be able to spot it, to identify it on a chart. And not only do you have to identify it on a chart, you also have to be able to, because this is one thing that people don't get when it comes to advanced pattern. These patterns, like, if you understand how they work, there are different market structures that these patterns might be successful for you. Other times they might not be as successful for you. Like, for example, if you're someone, if you trade advanced pattern when the market is in consolidation, your chances of winning on those patterns go beyond 75-80%. Yes, you can use it. Yeah, that's what I'm saying. The other method is some people use 786 retracement, some people use 127, but there is really no wrong way of doing it, because if you look at there is no wrong way of doing it. The only thing is that maybe the 786 retracement will give you more entries, but I usually use the 127 extension. But anyway, so as I was saying, advanced patterns, trading it in the market is on consolidation. You stand, you're gonna get more wins. Your winning percentage is gonna be a lot higher than if you were to trade it in a trending market. Although there's some advanced pattern that you can trade in a trending market, and you're still gonna be as successful with them. So you have to be very careful when it comes to advanced pattern. There's, it's not as easy as just learning what the Fibonacci retracement levels are. It goes much deeper than that. And it's something that, it takes a little bit of skill, a little bit of time, a little bit of practice to be able to identify it on a chart as well. I think I do have a video on YouTube that's, that teaches you how to identify advanced pattern like a pro. But anyway, heading back to, I hope that kind of answers your question, guys. I'm happy when you guys ask questions and about any strategy. If I know about it, I'll explain it to you guys. But yeah, looking at this trade, like, we can see the market is still, we're not too far off from our take profit level, and the pound yen is still on a losing, but at least it's approaching break even. My ideal scenario for today is the pound gets to break even and the dollar yen gets to my target, which is, how many pips away are we from that target? We are about 50 pips from the target. So there is a chance that the market will get there. Thank you, GLE. You're welcome. Yes, I know Fib and the Elliott waves. Yeah, Elliott waves. That's another strategy. Actually, my contraction and expansion strategy is has a huge part to deal with the Elliott wave. Is if you understand the Elliott wave, then my contraction and expansion strategies are gonna make a lot more sense to you. How to trade with trend line with order block. Please look at USD Swiss franc. Okay, I'm gonna answer your question in a second, but I'm gonna just pop over to USD Swiss, because it looks like Someone asked me to have a look at that. Oh, okay. What do you want me to give you my analysis in terms of? Let's look at the market on a higher time frame and see what the market is doing first of all. Oh, this looks like a falling knife, and I don't think you wanna be involved with the Swiss franc, because the market is definitely heading to this level. That's a level that is gonna break. And yeah, I mean, I would, just to give you my honest opinion in terms of like what if I was a trader, I wouldn't want to be in a long position on the Swiss franc. I wouldn't want to be in a long position, because looking at the structure of the market, looking at the daily chart, looking at the 4-hour chart, I mean, what you see is just a series of this unless you get a proper correction here, proper signal that, because don't forget, I just showed you a chart where the market is approaching a very, very all-time low. I don't know when was this low. This is January 2021, so 2-year low. The market is approaching a 2-year low, and most likely, more than likely, the market is going to break that. But how far are we from that level? We're about 104 pips. So yeah, I would suggest you wait until the market breaks that level, because we will break that level. It's just 104 pips away, and there's a huge momentum here that the market is going to break that level, and then just wait and see what the market is doing. Because what you're going to get, you're probably going to get some kind of a corrective pattern here, and then based on that corrective pattern, then I'll be able to give you a better analysis in terms of what the market is going to do. Because if we get a corrective pattern like let me show you what a corrective pattern is. If the market gives you a corrective pattern like this, like in a channel, in a descending channel, then you should be preparing to go long, just like we had this move here, the move that you're seeing here, because these descending channels will most likely break in the upward direction. So what I will suggest, like I said, if you're not in a short position, don't buy it. If you find a short trade, take it, but have it at the back of your mind that this is a 2-year low that the market is approaching. And once we get that 2-year low, you're probably gonna get a reaction, a correction. Something is gonna happen. The market it's not just gonna slide all the way down unless there's like a major kind of financial crisis going on. Something that's affecting almost everything. The market is not gonna slide down, because the market respects structure. This is what you need to know about trading, especially technical analysis. The market will respect this structure. So, and patience is very important in trading. So I advise you just wait, let the market come to the structure, let the market break the structure, let the market do what it needs to do in terms of corrective pattern, and then you can be able to make a proper trade decision based on that. Yeah, so I hope that answers your question. That was a great question by Asem Paro. I think this is not the first time I'm seeing you in this group, so thank you for coming back. Appreciate it. Let's have a look at our trades before we do anything. Like I said, guys, welcome to ask me any question on the group, and I will be happy to because this is the last day of streaming for me, because I don't trade on Fridays. By the end of today, I will be closing my positions, and which is, it's not I've had better weeks. This is probably the worst week I've had all year, to be honest, in terms of like I mean, I've only taken 3 trades. It's still going to be a profitable week, but the patterns have been a little bit unpredictable. So let's see how to trade with trend line and order block. Whew. Okay, G Alif, I think I understand what you mean by your question, and I'm gonna answer your question. But I want you to know that this question you're answering, from the way I understand it, this is a kind of what I'm going to show you is something that you probably need to be a long-term trader to trade what I'm about to show you, because I'm going to show you a few examples on the charts based on what you just asked me, or based on how I understand it. And I mean, you can apply that to lower time frames. but that kind of you know, in terms of trading with trend line and order block and all of that, it's something that I do on one of my different portfolios in terms of long-term trading and stuff like that. But I'm gonna take you back to a currency pair. Actually, that I just showed you a pattern on the USD Swiss franc. That's a pattern that, you know, it repeats itself so many times. So let's go to the dollar yen on a weekly time frame. Gonna delete all of this and let's look at the market now. I want you to look at these pattern. Just pay attention to these pattern, yeah? Pay attention to these pattern. And I don't even want you to just pay attention to the pattern. I need you to pay attention to what happened before the pattern, where we had a huge impulse leg. An impulse leg of about 2,000 pips that took probably less than a year. So from October, November, December, took about 3 months to get this huge impulse leg. And look at this corrective pattern that took almost 1,568 days. So we're talking about 5 years. Yeah, just over 5 years. So we have an impulse leg that took 3 months and a corrective pattern that took almost 5 years. Now this, in terms of these, you know, a lot of people don't really understand what is happening in these. The longer the corrective pattern is, the more explosive the move that is coming. And most of these corrective patterns, and this, you're gonna see these patterns everywhere. You look at the chart, especially higher time frame, you're gonna see a market move and then you're gonna see a corrective pattern, and this comes next. This is where a lot of traders, a lot of banks, a lot of hedge funds, this is where they place in the order. They're not placing the order here. When this move happened, you're just gonna miss it. You're not even gonna know what hit you if you're a trader, especially if you're trading in a lower time frame. This is gonna happen without you even knowing it. I like trading 15, or you trade on the 15-minute chart. Yeah, the things that with the 15-minute charts, I will have a look and I'll show you why some of the 15-minute charts, they're not really gonna give you a good results if you trade. But I can guarantee you that if you trade these pattern on higher time frames,